And you've also explained why then we need to invest in global markets. For example, you talked about hedging. Would there be another reason as to why we should invest in global markets?
Yeah. So first of all, our market is limited. Any market is limited, right? In terms of the asset classes that would be available. Asset classes just means the different options that you would be able to have to invest. So for example, if you're investing in the Kenyan financial markets, you can invest in equities, you can invest or stocks or shares, meaning owning a piece of another company that is listed on the stock exchange. You can invest in treasury bills, you can invest in treasury bonds, you can invest in corporate bonds, that's companies that are borrowing money from the public and then decide to list or not to list, whichever the case, you can invest in those. However, if you want to invest, let's say, for example, you're looking at AI and you're like, oh my gosh, Meta.
I want to buy Meta.
You want to buy Meta.
It's 506.
Right? Like you're on this AI season, right?
Yes.
Now, you're in Kenya. How do you buy AI? I mean, Meta.
I can't.
Yeah, or you're looking at pharmaceuticals and you're thinking, I want to get exposure into pharma because I want, right? Or you're looking at Tesla or companies like those that are, basically technology-based businesses that you think would do well. And I'm not giving any recommendations here, I'm just giving examples, right? How would you be able to do that? Or maybe there's some South Korean company that is doing so well, or a company in India in manufacturing that is coming up and doing really well. How would you be able to take advantage of those opportunities? So we're limited. And so when you invest in global markets, it gives you more asset classes, options of asset classes that you can look at to be able to get more returns or to lower your risk.
I get it.
You understand?
Yes.
So the returns may not necessarily be higher, but I know, hang on, I want to be able to earn in a foreign currency or hard currency. And my goal is to protect my assets. And so let me invest in a foreign market where I know at least the value of my dollar will not depreciate as quickly as the value of my shilling, naira, kwacha, Tanzania shilling, whatever. So that's why you would do that.
Okay, I get it. I love what you've just said there. That is so powerful, Rina. Thank you for that. You've said that you may not necessarily invest because there's a higher return. You're not getting... and I'm getting the question about returns right now, but it's steady, and there's also, you're investing in a different currency. So there's the gain that you make from currency exchange. Absolutely.
Let me give you another reason. The other day I get a call from a client and they want to invest $1 billion. I'm like, where are we putting this money? If I'm to buy stocks only in Kenya,
you're done.
We will... Where am I getting the shares from? Liquidity is also another issue. Do you understand what I'm saying?
I get it.
And so sometimes, let me give you another example where liquidity is concerned. You have very many Kenyans who own land. And they own land, lots of hectares of land, and they're doing really well. But a lot of these guys also don't have cash flow.
Asset-rich, cash poor.
Asset-rich, cash poor. Now, an emergency comes, and not necessarily an emergency, an opportunity comes. Their children are going to school. They have some gift and they want to go to one of the most expensive schools in the world. And they can afford it, but they don't have the cash. What will they need to do? Sell assets. Now, there's certain kinds of assets that don't offer you liquidity. But there's others, I tell you, you want to sell now, in a second, you can sell. And you are settled today. Now, there are markets that operate like that. But there are other markets like ours where you'd wait a little longer because there's no demand, or the kind of demand. If you're selling 1 million shares of Limuruti today, for example, you will wait a little while for us to be able to find a buyer. I mean, we have a great capital markets, don't get me wrong. It's just, this is something additional you want to add onto your portfolio to allow you also the liquidity. Okay, so there's diversification, ability to have alternative ways to make money. You want to be able to hedge against the shilling or the naira or the kwacha, an African currency or a developing market currency. And then you also want to be able to have liquidity. And even different assets. So just to be able to see where can I invest and have that option of different assets that you can invest in.
And I'm sure you also want to jump onto opportunities.
Absolutely.
Because there are crazy opportunities out there.
Yes.
The same way there may be opportunities here.
Yes.
Okay, I've got a question then now to continue this conversation. I've heard you use the word returns a lot.
Okay.
And I'm sure return depends then on the investment. So what is a low risk investment and what is a high risk investment?